What if you could know the exact stocks that super investors are buying so that you have a chance at beating the market just like they do? Well, thanks to Dataroma, which tracks the portfolios of value-oriented super investors, you may have the opportunity. We're going to cover the top 10 stocks super investors are buying today. These are consolidated, organized, and presented in a clear-to-follow manner. Yet still, there's some bias in this. You shouldn't use it as investment advice. It's of the utmost importance that you independently look at each stock we mention and that you don't blindly follow any of the investment activities of the super investors we're looking at. Number 10 is Charter Communications. 6 different investors added to Charter in the third quarter of 2023. Overall, 10 super investors own the business. Charter is a holding in Berkshire Hathaway's portfolio. Even though Dataroma says Warren Buffett, this is owned by one of Berkshire's other portfolio managers, Todd Combs. He's also the CEO of Geico. Based off of the interviews he's given, he was the one who initiated a position in Charter. Charter Communications is the result of 3 cable company mergers. Legacy Charter, Time Warner Cable, and Bright House Networks came together in 2016 to create the firm. Charter provides services to roughly 40% of the United States. It also owns a number of major sports networks. Right now, Guru Focus has a fair value for Charter of around $617 per share, but they have a possible value trap warning. Charter stock has plummeted from its 2021 highs of $821 per share. Today, they trade for around $406 per share. As a cable company and internet service provider, Charter has actually been very predictable in their past. Looking at their valuation chart, Charter seems to use a very well-known playbook in the cable industry. They're going to have high amounts of debt and really prioritize their free cash flows, which it actually looks like they're doing a pretty good job of. This is a different view of how they're split by business segments. 41% of the business comes from internet, 32% from video, then it's a mix of business, mobile services, and advertising sales. Charter's 100% based in the United States, and since its merger, it's been growing pretty steadily. Next up, we have CVS Health. This was also bought by 6 super investors this quarter. 10 super investors total own CVS. CVS operates over 9,000 retail pharmacies. It's also the largest pharmacy benefit manager. The company's changed a lot to be more vertically integrated through a number of acquisitions in recent years. Right now, Guru Focus has a significantly undervalued rating for CVS with a $108 fair value. Their valuation chart looks pretty similar to Charter's. CVS also trades on the low side of their multiples compared to their past. The company's both grown and reduced their debt in the last 5 years. When we look at a breakdown for the company, half of their sales come from health services, 28% come from health benefits, and their pharmacy and consumer wellness makes up the other 23% of the business. They're pretty well split through those 3 segments. Then with 6 more super investor buys, we have Dollar General. Dollar General is owned by just 6 super investors, so all of the ones who own the company were buying it in the most recent quarter. The biggest name here is Seth Klarman, who Warren Buffett said he would trust to manage his own money. It also includes Buffett followers Chris Bloomstrand and Thomas Gaynor. Dollar General has 19,000 dollar stores throughout the United States. Most items sold at the stores are for $10 and less, and most of their stores are in rural America. Right now, Guru Focus has a value of $274 per share for the company, with a significantly undervalued rating. Dollar General has been very predictable in their past, but the company's stock price is down a ton compared to what they were at their highs. They peaked at a high of $260 per share in 2022. Today, they're at $125 per share. The company's added a lot of debt since 2020. While their sales were increasing, the company's profitability has really taken a hit in recent years. Dollar General has bought back a ton of their shares over this time, reducing their share count from 338 million in 2012 down to just 219 million today. When we look at their business segments, most of their sales come from consumables, although 11% come from seasonal and 6% from home goods. Number 7 on our list with 7 super investor buys is Thermo Fisher Scientific. This is owned by 10 super investors as well, including Wally Weitz, who's a director at Berkshire Hathaway. Thermo Fisher Scientific trades for $490 per share. This is down more than $200 from their peaks in 2021. Throughout its history, the company has been a long-term compounder, increasing a ton for shareholders in the last 50 years. Right now, Guru Focus gives the company a value of $598 per share with a modestly undervalued rating. They have spiked up since the end of October 2023. Thermo Fisher sells scientific instruments and laboratory equipments, diagnostic consumables, and life science reagents. The company has grown their sales, but it looks like some of the profitability metrics have peaked for the business, at least for now. Super investors are likely betting that these will continue to increase. Looking at their breakout by operating segment, 50% of their sales come from lab products and biopharma services, 30% of their sales come from life science solutions, then analytic instruments and diagnostics make up the other 25%. Their sales are pretty well diversified. 50% come from the United States, 8.5% come from China, and the rest of the world makes up 39%. The company's gotten rid of some businesses in the last few years. It also looks like lab products and life science solutions are becoming more important for the business. Coming in at number 6 with 8 super investor buys is UnitedHealth Group. 18 super investors own the company overall, including Sequoia Fund, who has nearly 7% of their US portfolio in the company, and David Tepper. UnitedHealth Group trades for $547 per share. They have a guru focus value of $580, looking like they're close to fairly valued. The company trades at its all-time highs. Similar to our last business, Thermo Fisher Scientific, they've been a long-term compounder. UnitedHealth Group is one of the largest private health insurers in the United States. They provide medical benefits to 53 million members globally. Based on valuations, it looks like they may be attractive compared to their DCF. The company is pretty stable and pretty steady in their growth in the past decade. They've also bought back a good amount of shares outside of an acquisition in 2017. 3/4 of their sales come from United Healthcare when we look at their business split. 12% come from Optum RX, with another 9% coming from Optum Health. And based on geography, the vast majority of their sales come from within the US. Halfway through our list at the 5 spot, we have an old reliable Microsoft Corporation with 8 super investor buys. The biggest holding comes as no surprise from the Bill and Melinda Gates Foundation. It's also a huge position for Terry Smith, who's been called the British Warren Buffett, and some other notable investors, including Daniel Loeb and again David Tepper. Microsoft's one of the best performing companies in the history of the stock market. They trade at $377 when recording this video. Guru Focus gives them a fair value of around $347 per share, meaning they might be trading at around a fair value, maybe a little above it. Microsoft has a ton of different business offerings for both consumers and enterprises, most notably Windows, Office, and Azure. They look a little out ahead of their valuation chart, but this business is one that has continued to surprise and beat expectations for a long time. Based on their growth, profitability, and financial strength, they look very impressive, even if they do have some pretty high multiples. Microsoft earns huge returns and they've grown a ton, really growing their Azure platforms in the last decade. When we look at how Microsoft's revenues are split out, 41% come from intelligence cloud, 33% come from productivity and business processes, and 26% come from personal computing. Geographically, they're also very well diversified. 50% of their sales come from the US and 50% come from the rest of the world. In the 4th slot, we have a company that stands out on this list. It's Walt Disney. 8 different super investors bought into the company in the last quarter. Nelson Peltz with his Treon fund made a huge buy into Disney, adding more than 40% of his portfolio to the company. Since this 13 at filing date, Disney stock is up like a rocket ship. They had hit some multi-year lows after peaking at $202 per share in 2021. Right now, Disney trades for $96 per share, and Guru Focus gives them a fair value of around $134. Disney has the rights to some of the most globally recognized media, including Marvel, Star Wars, and Disney Pixar. They've also bet big on streaming, but their big money center comes from their parks, which have rebounded a ton since the COVID pandemic. Disney looks like it's still in some of the rebound phase and some of the build out for their streaming platforms, although they may be approaching the point where they round a corner. Their profitability has really suffered in recent years, especially coming into 2020. They were really ramping up these streaming platforms, and then that hit the business hard. Right now, Disney Media makes up 2/3 of the company's sales, with their park segment making up 35% of their sales. Media once was very profitable for the business. Now it's becoming more of a cost center as they're trying to expand into the future. Disney Parks was also super profitable for the business. COVID hit them hard, but they're starting to rebound. Most of Disney's sales come from the Americas, but 10% do come from Europe and 8% do come from Asia Pacific. At number 3, we have Amazon with 10 super investor buys. 24 different super investors own Amazon, including big positions from a number of well-known investors like Josh Tarasoff, David Tepper, and Daniel Loeb. Berkshire Hathaway directors Chris Davis and Wally Weitz also have investments in Amazon, though recently the investment manager at Berkshire who bought into Amazon cut their position by about half. Amazon trades for $147 per share. Guru Focus right now has their fair value at around $156, so they're about fairly valued. While they're mainly known as the biggest US retailer, most of Amazon's profits actually come from Amazon Web Services, even though they only make up around 20% of their sales. Amazon's down from their all-time highs after the company more than doubled their fulfillment center network. In retrospect, that's likely an overinvestment from the company as it really crushed their free cash flows, and they're not at the full utilization they once were. When we look at their sales by business segment, which again doesn't reflect their profitability, 43% of their sales come from first party, 23% of sales are third party. Amazon Web Services makes up 15% of sales, and their advertising business and subscription services through Amazon Prime are growing by quite a bit as well. Those three, AWS, advertising, and Prime, really drive most of the profits for the business, but the whole thing is a flywheel. Amazon has a big focus on the US, but they also have 30% of their sales coming internationally. This is an area Amazon likely continues to grow into the future. At number 2, with 11 super investor buys, we have Meta Platforms. 26 different super investors own Meta. This includes 8 super investors with 10% or more of their portfolios concentrated in the business. It's a recurring theme that we're seeing a lot of holdings in the Magnificent Seven, especially the tech giants. Meta's rebounded a ton from their lows of $90 per share. They're one of the best performing stocks in 2023. Right now, Guru Focus gives them a fair value of $324 per share. Meta owns Facebook, Instagram, Messenger, and WhatsApp. It's also making a big push into the metaverse with Oculus. Their valuations now trade more in line with the other tech giants after falling by a ton just a couple years ago. The overwhelming majority of Meta's sales come from their family of apps, with just 2% of their sales coming from Oculus and Reality Labs. Meta is very well diversified geographically. 40% of their sales come from the US. They have a major presence in Europe, Asia Pacific, and the rest of the world, despite being banned from China. The company had a lot of question marks about their growth and their investments in Reality Labs. It looks like investors are taking bolder positions in Meta after there have been more clarity answering those questions. This brings us to number 1, which can you guess what it is? Alphabet, the parent company of Google, had 12 super investor buys in the most recent quarter. Google's owned by 34 different super investors. This is led by Li Lu, the Chinese Warren Buffett, in the words of Charlie Munger. Even though 18% of his US portfolio is in Google, it's just a small percentage of his total assets under management. Don't let that fool you, but it is a bigger position from most of these other investors. No surprise that all 3 of these hyperscalers, Alphabet, Google, and Microsoft, have made it onto our top 10 list. Right now, Google trades for $137 per share. They've been extremely predictable in their past. Guru Focus gives a fair value to Google of $143 per share. Similar to some of these other tech companies, Google is trading for higher multiples than they have in the past, though they're toward the lower end and not at the levels Microsoft or Amazon is at. Google generates 99% of Alphabet's revenue, and 85% of that comes from ads. The company's growth and returns have been tried, true, and reliable for the most part in their last decade. A big flip for the company is since 2019, they've actually started to buy back shares. That may be a major part of Li Lu's thesis for the company. Even though they don't pay dividends, they're returning capital to shareholders, as Google especially has started to cut down from their $140 billion cash position. When we look at their business segments, 90% of their sales come from Google services. Most of those are ads. It also includes YouTube. Most of their other sales come from Google Cloud. Google, like these other tech companies, is pretty well diversified geographically. 48% of their sales come from the United States, and the rest come from Asia Pacific and South America. Not surprising, with the growth of cloud computing, Google Cloud is becoming a greater portion of their total sales. These are the top 10 stocks super investors have bought in the most recent quarter. Have any of them surprised you? Are you interested in any of these businesses? Let me know in the comments below and watch this next video. It may interest you.